Welcome back to the channel. I'm the Swedish dividend investor. Are you tired of getting wiped out from crypto? You're at the right place. So, for today, I just want to do a quick update and I want to go through my latest 2 buys in my high yield portfolio. We will do one company at a time and dig deeper into why I choose them. Before we move on, if you enjoy my work, don't forget to like, comment and subscribe. It really helps the channel out. So, the first company we will talk about is Gladstone Capital, ticker GLAD. It's my third position in my high yield portfolio. Gladstone Capital Corporation is a business development company that provides debt and equity financing to lower middle market US businesses. It invests across industries, focusing on small to mid-sized companies with $20 to $150 million in revenue and $3 to $25 million in earnings. The firm offers a range of debt solutions, including senior and second lien term loans, subordinated and mezzanine debt, and unitranche structures, and may take a minority equity position through common or preferred stock, LLC interests, or warrants. It also invests in acquisitions, buyouts, recapitalizations, and debt refinancing. Typical debt investments range from $8 to $40 million. Exit occur through strategic or financial buyer acquisitions, IPOs, or other capital market transactions. So, their latest presentation is from August. We will use this as an overlay since the annual report is just text and numbers, but some key metrics we will look up in the annual report. Their investment portfolio consists of 70.5% first lien debt, around 19% second lien debt, and about 10.5% in equity. First lien debt is basically first in line to get your money back if the underlying company goes tits up. And looking at their leverage or their debt to equity ratio, it's around 0.61 times, well below the sector average of 1.01 times. And some companies even go up to 2 times. They also have a pretty low non-accrual rate of around 1.7%. If we look at their sector allocation, we can see healthcare, education and childcare is their largest sector allocation, followed by diversified/conglomerate manufacturing and service, beverage, food and tobacco. For a full view, download their latest presentation or just pause the video. Now for the most important stat of them all, their dividend and their net investment income. Let's check their annual report. First off, just before I bought them, they cut their dividend $0.165 per share to $0.15 per share. And that dividend is paid monthly. So the annual dividend before was $1.98 and the forward dividend is sitting at $1.8. Looking at their NII from 2023, it was $2.2. 2024, it was $2.11, and their fiscal year end September 2025, it is sitting at $2.02. Now, we got to remember the NII was higher due to higher rates. Will they be able to offset the lower rates with higher loan volumes? I believe so. After taxes, the available cash is $1.818, so the dividend is covered for now. Looking at Seeking Alpha, we can see their dividend history, and yes, a huge cut at the financial crisis, but after then, the dividend has been pretty stable, and I'm fine with that. Let's hold off with checking my dividend tracker and let's look at the other company I bought. Hercules Capital, ticker HTGC. Hercules Capital is a business development company that provides venture debt, growth capital, and selective equity financing to venture-backed and emerging growth companies. It offers structured debt with warrants, senior and mezzanine loans, equipment financing, revolving credit lines, and bridge financing for IPOs, M&A, and other liquidity events. Hercules focuses on companies that have operated for at least 6 to 12 months and primarily invests in US technology, life science, energy and sustainability, and related high-growth sectors. Target areas include software, hardware, communications, biotech, medical devices, clean and renewable technologies, and advanced materials. Typical investment range is from 1 to 40 million in debt and 5 to 200 million dollars in equity, with selective, control-oriented equity positions. The firm occasionally makes equipment-based loans and co-invests with private equity sponsors. Exits include IPOs, M&A, and secondary sales. So, let's check their portfolio. They hold around 86% first lien debt and about 7.5% second lien debt, and their equity investment is almost 4% of the portfolio. Their leverage is around 99.5%, so that looks pretty normal, and it's just below the sector average. Their non-accrual took me a while to find. I had to dig deep into their latest quarterly report. It is 1.2%, very low and very nice. Their sector allocation is the following: 35% into software, 23% into drug discovery and development, 19% into healthcare services, and about 10% into consumer and business services. Here are some of the companies Hercules has invested in or lended to. Now for the most exciting part: dividend and dividend coverage. The regular dividend is $0.4 per quarter and share. Their latest NII was 0.49, so it is covered. But this company has been paying a pretty generous and frequent special dividend for the last years. Is it something I count on? No. Do I welcome it? Heck yeah. Looking at their dividend history at Seeking Alpha, we do see a reduction in 2009 from $0.3 to $0.2, and then growth from there. And since 2018, they have been paying a whole lot of special dividends, and this was during a lower interest rate environment. I'm not that worried about a cut, and like I have said many times, even if they cut a bit, it is still meaningful income that can be used to reinvest. Alright, let's check the high yield portfolio dividend tracker. First out is Glad. I have 95 shares and I've invested $1,875, and I'm up slightly since I bought. If we scroll to the right, we can see their dividend is $1.8, giving me a yearly pre-tax income of $171. I only pay 15% withholding tax on BDCs, so always take your own tax situation into account and see how an investment fits you. We also see their frequency being monthly. I do like that, and my yield on cost is 9.21%. Sweet. HTGC, 74 shares, bought at $16.83. I hope to buy some more the coming days if they dip below $17. I've invested $1,245 and I'm also in the green here. They pay a regular dividend of $1.6 per year, making the yearly income $118.4. Their distribution is the following: March, May, August and November. My yield on cost is 9.51%. Awesome. Looking at the income side of the portfolio, this portfolio has already produced $62.35 in after-tax income. And as always, we will check the pre-tax income going forward. $667.46 per year, $55.62 on average per month, $12.84 weekly, $1.83 daily, or $0.08 per hour, and that's every hour of every day. Looking at the after-tax dividend calendar, we can see my expected annual income as for now is $567.34, and I expect to receive $25.26 in December. We will see if I break the $100 level. I hope you enjoyed this insight into my high yield portfolio. If you did, make sure to like and subscribe. And I want to hear from you. What is your favorite high yield investment? Your interactions really help the channel. But that's it for this one. Stay tuned for more dividend and income investing content. I'm the Swedish Dividend Investor, and I will see you in the next one. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!